It's pretty hard to follow
Yeah.
Mrs. Adenoa, but we'll try our best. I'm Sasan, one of the co-directors for the forum, and I have here with me Damola Oni from Vesti, and Vesti is one of our sponsors this year. And I'm just going to give Damola a few minutes to just share a bit more about what Vesti does and their mission for Africans. Over to you.
Hi, Sasan. Can everyone hear me? Yeah. Awesome. So it's good to be here today, and I'm glad to see everyone. I'm Damola, like you said. I'm the Corporate Compliance and Legal Officer at Vesti. So just to tell you a quick story about how this company started. In 2020, there was a revolution sort of in Nigeria, called NSAS. And this was when everyone felt like they needed to leave the country, young people. And the founder of this company, Yolu, he did a webinar where he just like, it was angry. It was like, if you need to get out, come on this webinar, I'm gonna teach you, show you how to leave the country legally. And boom, 6,000 people attended that webinar. And that was surprising, and we started taking it from there. And then we started seeing the challenges that people face when they leave the country. People started coming to us, they need to make this payment, they need to do this, they need to do that. Prior to now, when it comes to migration in Africa, people have always done one of the other. They either stick to migration, or they do the fintech aspect, which is a financial arm. We are the only company that does both migration and financial services. Now, this is where it gets interesting. There are some payments today, if you're going abroad, especially the United States, that you cannot make within the shores of Nigeria. I'll give you a very good example, service fee. People come to us, they say, oh, we want to make this payment, we want to make tuition. We can't really do this, in Nigeria. So that's where we come in to say, okay, don't worry, we're going to make this happen for you. And of course, this journey started in 2019, flowing through 2021. And then from there, we started automating things, right? Things that we don't want to be doing by ourselves. We started building an app. And then we grew the app massively to 80,000 users in 2022. And then during the same period, we were accepted into one of the biggest accelerators in the world, Techstars New York. And of course, we were backed by Techstars, and then we raised 1.2 million in our pre-seed. And of course, 2023, we have expanded to 6 countries, where the United States, Nigeria, Zambia, Ghana, the UK, and of course, Kenya. So that's it about Vesti. And of course, today we're also looking at helping most people to also move back to Africa. So people think we only help people move out of the country, but it goes both ways. There are a lot of people who are trying to invest back in Africa. So we see it as sort of like, cross-border. As we help people move out, people also being moved back to invest into the economy. So that's where we come in. So yes, so today we call ourselves as the difference between a crash landing and, thriving in a new economy abroad. So yes, thank you very much. And that's just a brief overview about Vesti.
Amazing. Thanks, Damola. I know there are a lot of master's students here in the room today, and if you're looking for a path, reach out to the Vesti team. They might be able to help you. And now I'd like to invite the other panelists onto the stage as well. If we could give them a hand. Awesome. So we've got Tunde, who is the CEO of Vendees over in the corner. And then we have Tarek, who's the founder of Affinity Africa, and Zanele, who's the founder of Wella Health. And I'm super excited to paint entrepreneurship as a fun, beautiful journey to the audience when we all know that's maybe not the case. So my first question will be for Tarek and Zanele around your journey to product market fit for your startups. And how did you guys go around validating your different concepts and the actual true need in the market for what you were building? And did your products change at all over time? Because often as a founder, you vision one thing and your V10 of that product is just very far from what you actually had thought of in the beginning.
Yeah. I'll start. Yeah, so we run a health startup. It's based in South Africa, Johannesburg, where we offer health services. So it's like telehealth. We offer health services to people at home and in the workplace. So when we started, it was in 2020 during COVID. And at that time, it was only me as a solo founder. And it was to deliver medicine for people who are on medical aid, like your middle class. The idea was to deliver medicine when we were all locked in and people couldn't go out. But then when one went out to the market, the people who were calling me, surprisingly, were the people who use public health care. They would be like your blue-collar workers, so it was not the middle class that I envisaged it to be. So it will be like your blue-collar worker who's like, hey, I use public health care. I have to go and fetch my medication, like my ARVs or my diabetes medication from a public hospital. And if I do that, it means I have to queue from 5 a.m. and only leave the hospital at about 2 p.m. And because I'm blue collar, it's no work, no pay. So A, I'm losing money, my wages for the day, and B, it's also a matter of dignity queuing there in a public healthcare system. So that was pivot number one. Those are the people who were calling, and I was like, oh, because I was not getting the people that I went out to serve. And then that's when we pivoted and started, doing medicine delivery for people who use public health care. I remember those days because, you're starting, you're scrappy, startup founder. I would go on a taxi at about 5 a.m. so that I can queue for those people. And then after I get the medication for my people, I call the local scooter driver because you are a tech startup, you want to be as asset-light as possible, you don't want to buy scooters and things like that. Then you say, hey, Brad Joe, I'm here at the gate with my 10 medication, please go and deliver for those people. Then it's 3 months, 4 months into it, then we started getting calls from B2Bs, from your corporate, saying, hey, can you do this for us? But now, instead of medication, we want you to deliver nurses or doctors to our patients' homes or our employees' homes, or it will be like your health insurer, which one of our biggest clients that time, our first client was Discovery Medical Aid, which is one of the biggest insurers in South Africa. So the market kind of pushed us along and told us what was needed by the users. So
Amazing.
Awesome. Can everyone hear me? I think it works. I'll maybe tell you a bit about my business to begin with, and then kind of go in reverse order on how we got there. So we've built, myself and the team, a digital bank in Ghana. We're not a neobank. We don't like using that term because we actually operate as a proper bank. We got our banking license in 2022, the first grant of its kind in Ghana in 11 years. So it was a huge. And I'll take you through the journey in terms of how we got there, and especially getting to product market fit, which is quite important. But in only 15 months with no marketing spend, we have about 18,000 customers operating just a 2-kilometer radius from where we are. We got our app approved in December last year, and we have 3,300 users in the app just by word of mouth. But the most fascinating thing is that 87% of our customers were their first ever bank account, which is super important. And focus on having sort of that North Star is something that's really important when you're trying to find product market fit. And then the second thing, which we take a lot of pride of, is that 62% of our customers are women as well, too. So we focus... Thank you. We focus on micro, small, and medium-sized enterprises. So I'm Ghanaian. I quit my job in the UK. I worked for a really large hedge fund. Moved back to Ghana about 10 years ago with a specific focus on wanting to support small businesses, which was very, very important. How I wanted to do it was sort of a question. I was putting money out of my own pocket, investing in small businesses, saw that there was a lot of need for capital, which was quite important. I wanted to actually build a VC fund to begin with. Then realized that a lot of these small businesses actually operated as family businesses, and they couldn't understand the difference between equity and debt. It was also very hard to scale. And so through all that, decided to actually build a bank. Of course, you don't go out there and build a bank, instantly. It's a very long journey. And as entrepreneurs, when you're building something, you take it in stages. So the first stage was actually mystery shopping. Believe it or not, I spent 6 months going to every single bank and microfinance institution in Ghana trying to open an account and apply for a loan. Saw a big chunk of the market that was missing between incumbent banks, all the big ones that we know, and the small players. Found that middle ground, which was very, very important. The next stage after that is, you think to yourself, great, I can take the risk now and start my journey. I sold my house in the UK, bought a microfinance business in Ghana, which is how we started. And through that, we weren't able to launch Affinity, my business, but what we could do, though, was test with a customer base that we were intending to launch for. The next was a bit of luck. I know a lot of people say you make your own luck, but this was actually quite a lot of luck. And believe it or not, actually, COVID helped us out a lot. In 2019, I raised some money to upgrade our license to a banking license, and then COVID hit in 2020 when we applied for our license, and that gave us the luxury of about a year and a half to actually test our products. And our product, our current accounts, savings accounts, loans as well too. We've done about $26 million of deposits and $13 million worth of loans so far. But how we delivered it is using technology. So the products haven't changed, but the delivery has changed. We were incredibly arrogant to begin with. We built an amazing app that was like between Snapchat and TikTok. It was so cool. We put it out there in the market. People looked at it and said, what on earth is this? We don't know how to use it. So just by testing and listening to your audience was something that was very important. And we had the luxury of doing that because of the delay of COVID. And then since then, things moved very, very quickly. In 2022, we got our license. We put our first product in the market in October 2022, and we put the app out. And it's through all that patience and that focus that got us to where we are right now. And it's a constant iteration process. You get feedback from your customer. We've reduced our onboarding process by about 50% in the last update, which came out a couple weeks ago. And it's a product that's needed on the market. You build conviction over time. It helps when you have the ability to do that. Apparently, Slack took 4.5 years to get their first customer. But you've got to have deep pockets to do that. Of course, I'm not saying that that's what you should do. But it helps when you have that patience and that focus and time.
Yeah, no, definitely seeing how customers in the market will actually guide the way your product's developed. And it's amazing to hear your stories of how you guys actually walked in the shoes of your customers, went to the banks, and Zanelli actually picking up prescriptions. And shout out to Brother Joe. And Tarek, any quick rebuttal by the comment we had about Black Panther being made for you? I just realized your shirt actually says designed by an immigrant.
I'm sorry, I'm a stickler. It's an amazing Sierra Leonean designer, has a shop in London, Labrum, please check it out. But the new Black Panther movie, a lot of my friends actually produced a lot of the design in there. So a lot of amazing Ghanaian craftspeople. So Takura is another one. Please follow them.
Amazing. Okay, well. This Adeno's team. Okay, so moving gears a little bit onto regulatory challenges. We know that they are present in Africa, and they change every day. CBN can wake up tomorrow and say, your license is gone, no FX, no nothing, no crypto. So I'm going to turn the table over to Tunde and Damola quickly to share what regulatory challenges that they've had with their businesses. And Tunde, also, if you could speak on the Africa Continental Free Trade area and seeing how that could also bring in new opportunities for African businesses. Yeah.
Okay, I'll go first.
Yeah.
Yeah, so let me give you a quick recap as to what Vesti initially wanted to do before we pivoted to migration. So we wanted to build a wallet system in which Africans can trade stocks from Africa. That was the initial thing we set out to do. And then this is just to focus on the importance of liaising with regulators earlier on before you enter a market. So we spoke with some of the key stakeholders in that space about what we wanted to do. And then one of the very big stakeholders told us that, see, the government is going to clamp down on this space in the next couple of months. You might want to do something else. So that helped us to shift focus completely from what we initially set out to do. So it's always very important to liaise with the regulators in the countries that you're about to move into, just so you know that you're doing the right thing. Yeah. That's the first step. Now, the second step is to layer on the licenses of already set up, could be banks, could be companies doing similar things, such as you.
Yeah.
And the reason for this is because as startups, as new companies, there's this urge to always get your own licenses. It's very good, don't get me wrong. If you can't, please do it. but it's going to save you a whole lot of time if you layer on existing licenses of banks. And I'll give you an example. So when we moved to the US, I wanted to start transacting in the US. To get the MSP license in the US is very, very hard. And also you need to get the MTLs in all the 50 states. That's a long time that we do not have. So we basically had to partner with a bank in Buffalo, New York, who helped us to circumnavigate the entire, FinCEN stress. So basically we layered on their license, and that allowed us to start issuing out bank accounts to users from Africa. Ordinarily, that would have been impossible because of the KYC, anti-money laundering, requirements.
Yeah.
So that helped us a great deal. And another thing I'd like to say is, hire very competent compliance professionals. It's going to help you a great deal to navigate, the large terrain, that landscape, because the penalties are huge, they are stiff. I mean, even in the UK here, HSBC was fined a couple of years ago because they had to, file the anti-money laundering laws.
Yeah.
So those are, key points, from me concerning regulation.
Awesome. Tunde? Yeah.
Cool. So I run a company called Vendies. Essentially, well, the technical way to explain Vendies is we build supply chain technology that allows food businesses to move food from point of production to point of consumption. Our most popular product is the Vendies Marketplace that allows restaurants to buy directly from farms and food manufacturers, sort of like Amazon for restaurants. We're currently present in 2 countries, Nigeria and Ghana. And so when we think about regulation, we've gotten here in 4 years. We started operations in 2020, and we've moved very fast. Sometimes in Africa, when you think about regulation, you're usually thinking about the negatives of it, like, oh, CBN is clamping down on this and all that. But sometimes regulators are actually proactive in trying to get things to work. For instance, the AFCTA, which is supposed to be a policy or legislation that allows the movement of goods and services to move freely between African countries. All the African countries have signed up to it now, as far as I know. And that regulation, when it is properly executed, because it's been signed now and it's not really as effective as possible, and I'll talk about that. But when it moves into effectiveness, it would allow a lot of free flow of goods. For a company like Vendies, that's very important. For startups, it's very important because when you're pitching or when you're thinking about your startup idea, and when you're pitching to investors sometimes, or you're thinking about how big this can be, you usually have to think about Africa as one market, even though Africa is not one country. And what will help that dream grow faster for a lot of startups is when there is a lot of coordination between countries. Yeah. And AFCT is a very good step in that direction, even though the execution is not yet
We'll see.
going as well as it should. Because we in Vendies, we face a lot of challenges sometimes when we're trying to move crops that you can readily find in Nigeria to Ghana and vice versa. So it's not yet as smooth as it should be, but there's a lot of hope there. And if that works, it's not just even for startups, even your everyday farmer, even your everyday small manufacturer can see their business directly grow, because now they don't just have to consider their locales. Right. They can move goods all over Africa as seamlessly as possible.
Yeah. Never thought about that, guys. Tarek, also wanted to ask you, when you were applying for your banking license, first license in Ghana in 11 years, how did you get that opportunity? And do you think, founders who in Africa who might not have a certain network are able to sort of navigate the regulatory space as easily as maybe others that might have a stronger network in their market?
Absolutely, and I think it also applies to countries outside of Africa as well, too, in the global north. So everyone knows that Monzo withdrew their license in the US, N26 got rejected, and the only kind of digital bank that exists in the US is Varo Bank. So it's not an issue that we face only in our country, right? In our countries, our continent, it exists elsewhere too. But regulation is a language. And historically, if you take a look at how regulations evolved over the last 3 decades, it's always worked in favor of the consumer and against the financial institution. That's always the golden rule, right? You saw it in the financial crisis here when there was a deposit guarantee put on place and liquidity measurements were increased, capital adequacy requirements were also tightened. A similar thing has happened in our part of the world, but it's a bit more complicated. So I'll speak on behalf of Ghana, but of course those apply to other countries as well too. We have fragile economies. You know, our currency depreciates, like similar to other countries too. We're a net importer, which is obviously not a good thing and not a good place to be, despite having gold, oil, and cocoa as well too. So I think one of the biggest concerns with government, for example, is capital flight, so FX issues. As a result, measures are put in place not to be able to just freely send money out of the country. And it's important to understand why that exists, because you're protecting the economy. So when technologies like Bitcoin come along, or crypto, that obviously bypasses that issue. And so you know automatically what's going to happen. They're going to be regulated and shut down, right? Just because they want to protect Nigeria, Ghana, and other countries as well too. So it's definitely a language that's specific to regulation when you're dealing with regulators. And what's very important is to try and figure out why and trying to understand that. And it takes people with experience and decades of experience to do that, and also how to communicate and align your values with the regulator as well too. So when we don't deal with FX, by the way, and that was one of the reasons. So it's all in local currency. And one of the first things we did when we sat down with the regulator was we said the government of Ghana has a mission to improve financial inclusion. We provide affordable bank accounts and loans to customers, specifically micro, small, and medium-sized enterprises. All of a sudden, the first thing we heard is, we're listening, we're interested, please continue. And of course, it took a year and a half, 2 years to actually get there.
Right. No, I think it's you framing it as a language is very important, and if you don't really understand, the motives and the objectives of the regulator, and you're pitching, like you said, an FX business that's potentially going to take FX currency out of the reserve, but I think there are also a lot of nuances because if a market woman who's buying shoes from China to sell in Nigeria is able to more easily send money to her supplier, that business will actually grow.
But that's allowed. Though. It's just freely sending money out of the country. In Ghana in particular, that's not allowed. You can make payments, you can pay your bills, internationally. You can pay your Netflix bill, and that's maybe US dominated. That's allowed.
I think, we'll see how we can continue to better align with the regulators there. Okay. Now moving over to fundraising for any aspiring founders in the room. I think, Tunde, we'd love to hear from you. Vendees has raised most recently a $30 million Series A, and you've raised from... I know, and Tunde is just sitting so humbly over there. No big deal. And you've raised from two of the largest funds, Africa-focused funds, TLCom and Partech. How did you get it done? What are some of your key learnings, and what advice would you give to some of the entrepreneurs in the room who are looking to raise capital, and especially in this economic climate?
First off, the reason I'm sitting humbly here is Bendy's raised 30 million, not me.
Yes.
So it's not my money. I'm still a regular guy. Just to quickly touch on it, because we're spoiled for time. There's a lot that you can talk about when it comes to fundraising. The room lights up a lot when you hear, oh, they just raised $30 million. But there's a journey to that. And the money itself is just a means to an end, not the main thing. So why I say this is, there's a journey to fundraising from pre-seed, when you're just ideating, to seed, when your business, like you have your first product that you want to test. And then from there to Series A, where at Series A, investors want to see that there's some sort of product market fit or a journey towards product market fit. And that journey is very important. Like how you go from point to point is important. The main thing, if you're going to take anything from here about fundraising, is you don't build your business to fundraise, or don't build your business because you want to fundraise, or don't start a company because you want to fundraise. Build an irresistible business. And when you build an irresistible business, it means you're building a business for a target audience for your users. And when that happens, fundraising will be easy. Like, funds will find you. That's the honest truth. Like, when you build an irresistible business, you're not, like, you're not, what's the word now? You're not chasing funds. They come to you because they want to partner with a business that can supercharge their money. So think of VC money as rocket fuel. It's not fuel for a normal car or your Toyota Camry. It's fuel that will potentially take you to the moon. So if you're not building a business that has the metrics that can take you to the moon, then VC fund is not for you. So essentially what I'm just trying to tell you about fundraising, the most important thing to take from here is build an irresistible business that's fast growth, that your users can potentially ultimately fund, and that you're not going to keep needing to fund with VC money, and fundraising will be a lot easier. If you want to talk about other smaller things later, we can talk about it, but yeah, I'll just leave it there.
Okay. Build an irresistible business. I think that, you know, in the West, or maybe not in today's economic climate, but, you know, a couple of years ago, startups could really raise money just based on an idea. And I think, you know, African startups don't have that same luxury. You have to have, you know, decent level of traction. You're telling investors, hey, come invest in a startup that's operating in Africa, right? So I think that, you know, the bar is definitely higher, and you actually have to build a real business.
That just reminded me of something quick.
Yeah.
Because it's good to tell stories so that you understand a bit of it. We got into YC in 2021, and you listen to all the YC partners, they tell you all sorts. But me and my co-founders, we knew we're from Nigeria, Lagos. And so, and that's the thing with taking advice, you have to tailor it to something that fits you. And during our YC cohorts, we're thankfully one of the fastest growing companies in the whole batch, whether in the US or in Africa. But we also knew, no offense to anybody, that we're not white guys from Silicon Valley.
Yeah.
So the African tax was going to be there, the discounts was going to be there. And we knew that, we just sort of instinctively knew. It wasn't like anybody told us this was what we were supposed to do. We instinctively knew that if we waited till demo day to raise our seed round, we might not get the best offers, we might not be able to raise our targets that we wanted to raise. And so we went into fundraising earlier. And one of the things that helped us to get there was, at the beginning of the cohort, we focused on growing our business as quickly as possible. Because another thing that we didn't have the privilege of, because we're not white Silicon Valley boys, was nobody was going to fund a nice idea.
Yeah.
Nobody was going to fund a sexy sounding business. They had to see that the numbers were looking good and they could still grow a whole lot more.
Yeah.
And so that's what we focused on doing. And so by the time we opened our round about 2 weeks to demo day. Demo day is when all the startups come together and pitch to all the investors. We opened our round and it closed in less than a week. So we closed our round and it was oversubscribed. So like I'm just saying, like for Africans, the requirement for your businesses is a whole lot different than if you were from a more privileged economy. So that's something to take note of.
Great. Thank you, Tunde. And Zanele, if you could also quickly touch on your fundraising journey and sort of, you know, you're a bit early on, but I think you were able to sort of attract investment coming in without going to investors, which is very special.
Yes. So I'm with Tunde here. Don't build for VCs, don't build for investors, build for your users from day one, because I think we're falling into a trap that, you know, you see this person has raised $10 million, $1 million, etc., and you have that FOMO, and now you want to build to mold for the VC instead of your users. So in our case, we just started building. You know, we were using WhatsApp, Excel, and building and just going out there and getting customers and building in public. And our first angel check came from a Twitter DM. Somebody from Canada saying, hey, we love what you're doing. We've been watching the journey, you know, your videos and all of that. We want to invest 25,000 USD. What is your valuation? That time, we didn't even know what our valuation was because we were building, and because we thought, VC will come at a later stage.
Right.
Obviously reached out to investor networks, came back to the guy with the valuation. He invested. We got a second angel like that, and then we got a VC. So it was just people coming to us and saying, we want to be part of the journey.
Right.
So so we're currently just building now, and we'll raise again at a later stage.
Yeah.
But now we've grown, we nationwide in South Africa. So build for your users, don't build for the VCs. Like Tunde was saying, investment will come to you naturally.
Yeah, that's amazing. Thanks, Anele. Okay, I'll move to our sort of last point we want to touch on for today before we move to Q&A, which is around your team and finding great team members, great talent, especially with some of your first employees. We know finding talent is very challenging on the continent, but generally just for startups, right? You're early days, you don't have money, you're offering some dev, I'll give you some equity. Please come on, build this thing for me. So yeah, if Damola, we could start with you, just sharing a bit more about your team at Vesti and the culture and how you got some of your early believers. And we'll hear from some of
All right,
panelists.
thank you. So when we started, we knew that our people were going to be very integral to part of our strategy. So what we did was we created a culture deck in which we spelled out what we wanted to do, our vision, our mission, and that sort of helped us in tailoring, hiring. So as we're growing across different countries, Ghana, Kenya, Zambia, the UK, we sort of use that as a metric in hiring. Yeah. And what we'd like to have to do is also that we layer or we leverage on our connections within the ecosystem, because like you have said, talent is the competition is stiff. Everyone is looking for the top talents in the country, right? So we do that, and also we offer incentives, great benefits to our employees to ensure that they have a very good place to work. And of course, if other big boys in the ecosystem come calling,
and
they
girls.
would have a reason to stay with us. So we also sort of try to be there as we are. A very, very key aspect of our hiring policy is we've integrated a very robust DEI policy. If in our leadership team today, we have almost more women than the men in our leadership team. So that's one of the areas that we're looking at, just to ensure that we have a very good workplace culture.
Yeah.
So that's just it from me.
Amazing. Thanks, Damola. Tarek, would love to hear more about your team at Affinity Africa. You guys have been around for 10 years, so what has been that journey? A round of applause, please.
Well, technically we've been operating for 16 months, but I started this journey 10 years ago. Actually started the business as a consultancy firm, and then I've decided to move into financial services after that. But I've had 3 iterations of the business, so we're 160 people on the team now, so quite, relatively large, and very different types of people as well too. Don't forget, we're a regulated business, so we have adults who come from banking backgrounds, who maybe not necessarily are very innovative, but of course understand liquidity, assets and liabilities, and all the sort of stuff that is boring to the average person. Yeah. And of course we have young, amazingly innovative people who are building product, our tech. And those two don't match, right? Because that sort of culture doesn't tend to understand regulation. Yeah. And they certainly don't want to hear no at all, right? And then the third is we have agents. So the 160 is actually full-time employees, agents, and also interns that we have. I got it wrong the first 2 times, and the last sort of, I would say, year and a half, 2 years have been pretty amazing. At the early start of your journey, and I'm sure my panelists will agree with me, when you have just an Excel spreadsheet or a deck and you're going around and begging for money, you don't really have an office, or trying to raise, the first person who says they want to work for you, you just can't believe it, right? Yeah. You're like, what? Yes, absolutely, I'll take you on. First mistake, because they might not be technically competent, and that's the first thing you kind of realize. So moved away quite quickly from that, realized, oh my gosh, this is not working out for me. I'm going to hire people who have great CVs. Second mistake. So when you hire people from banks who don't really understand what you're building, that values alignment is something that is missing, which is very, very important, especially when, as a founder, the journey's tough. You hear a lot of no's. And no from the regulator, no from your customers, no from your, all your other stakeholders as well, too. So you really must basically hire people who are technically good at what they do, but also care about what you're building. The values are aligned. So I went on this amazing journey in 2022 when we got the license and we moved. So we bought a microfinance business called PayFlex. So as a brand, the business didn't exist really till end of 2022. We moved to our new office. Affinity was unveiled. We actually decided to involve every single person in the company in this sort of values journey that we wanted to build, because ownership had to come from everyone in the company, which was really important. I hired a consultant, the only OKR certified coach in Ghana. She actually runs our people and talent team now, which is amazing. We put a survey out and we asked everybody, everyone got one vote, all the way from the country manager and myself down to the janitor. What values do you have as a human being? And there was a whole list, about 60 in total. Same 60 list, what values do you think you want to work in a place of work? And what values do we currently have in the business right now? So we actually measured the cultural entropy of the company, which was really fascinating. Then what we did is we then shortlisted to 10, and we gave a poll out to everyone, and we said to everyone, pick your top 5. And at the end, we picked our top 5. There was accountability, there was a sense of ownership from everyone, and now everyone's sort of living that culture. And it happens to boil down to an acronym called ACT-IT. So accountability, customer-centric, trust, very important, innovation, and teamwork were the 5th ones. And I didn't pick them as a founder. I had one vote. It was actually picked by the entire team. And what has happened over the last 18 months to the business and how everyone has come together, app approvals, traction from the customers, it's really been a huge shift. But unfortunately, as a founder, it's part of the journey. You will get it wrong, and you'll learn from your mistakes and adapt and change as you go forward.
I love that. Well, that's a massive team. I don't know how you're managing that on the ground, but it sounds like
with good people, good leaders.
Good people. And Tunde as well, would love to hear about your team at Vendees.
Just very quickly, we actually have about 300 staff. Full-time. So it's a lot. Just thinking about how you scale from 4 founders to 300 in 4 years, it's a lot. Like, my biggest pain point is human resources. But one of the things that's not spoken about a lot when people talk about businesses or starting startups, especially with leading people, because when you have an idea, for that idea to grow beyond you, it needs to grow beyond your circle of influence into other people. Other people need to be able to carry that torch for you. For instance, I'm sitting here now, and I'm not worried about what's going on with Vendees as a company, because other people are seeing to it. And so one of the least talked about things for startup founders is the ability to be a storyteller, a storytelling leader. And that's what helped Vendees in the early stages, when we couldn't compete with anybody for money. When, if you wanted to hire a really good person, you were competing with the Access banks and co, who were going to pay them thousands of dollars per month, and you didn't have that. So you needed to be able to tell a story and sell a vision to good people who would follow you. Because as a leader, as a startup founder, you're a leader, and people need to follow you and buy into that vision. And that's very, very, very important. But again, we're in Africa, and then there's something called
stories.
Yeah, there's something called stomach infrastructure. You can't sell a vision to somebody who has not eaten. So you still need to cover the basics. And so like I said, you take whatever you hear from people, you take it with a pinch of salt and apply it to your case. For many roles when we were a younger company, we're still young, you just had to deal with what you could afford.
Right.
That's the honest truth. There's something like I tease my co-founder for, because I like to say he has the Arsene Wenger mentality, because even now that we can afford some type of staff, he still wants to coach people, and that's a good thing. So at that stage, you find that, at the early stages, you find that you hire people with potential because you want to coach and groom them into what's possible. And to be fair, we've had some superstars who've grown with us over the last 4 years, and they're now working at the level that we are at right now. So the thing to take away from here is build a culture around a really good story that galvanizes your workforce. For us, we buy into what we call the ant philosophy. If you look at our logo, you'll see the ants. And the beautiful thing about it is the same stories we were telling 4 years ago are now even more real, because the stories we told them were like, we think of ourselves as an ant, a colony of ants. With one ant, you're insignificant, but with a lot of ants, you can really take over the world.
Yeah.
And it's good to see the fire in the eyes of the employees that have been with us for 4 years, who saw us when we were just in one small room. And now we are operational across Nigeria and Ghana, and we have about 4,000 businesses on the platform. So a good story helps to galvanize your workforce and helps to stimulate a good culture.
Thank you, Tunde. So now we're going to take questions from the audience. I've already received some here on this fancy iPad. So the first question here is for Tunde. How has foreign exchange matters impacted the profitability of your business? And I'm just going to add on small to that question, and that's from Oyinda in the audience. How does this worry you in terms of returning, your investments to your investor?
Very interesting question, because I think one of my investors is seated here somewhere. So when he said in our economies we have to deal with devaluation, I didn't want to cut him short, or just interject, because in Nigeria we're not dealing with devaluation, literally. Mrs. Jumoke said, I don't know what the exchange rate is right now. It crashes per second.
Yeah.
How does it worry me? Yes and no. No, because compared to the devaluation, we're still growing way faster than devaluation, which is a good thing. And that's, again, like I said, build on irresistible business.
Right.
But in the end, it still worries me, because we don't want this to keep going for a long time.
Right.
So essentially, how you deal with this is, you might be as fortunate as Vendis to be outgrowing inflation and growing faster than devaluation. But just ride it out. Write it out, and then keep your forex cost as low as possible.
Right.
Try to do a lot of your transactions in local currency, because if you're structured like the way we are, we're going to hit break-even on profitability, whether the naira becomes 2 million to $1. Why? Because most of our costs are in naira,
Right.
and we're growing in naira. So as much as possible, while we wait for the government to fix the issues, because that's out of our control, just as much as possible, keep your costs in local currency and reduce your exposure to foreign exchange.
Yeah. Thank you. And our second and last question, we're almost at time, is for Damola from Aji, who's a startup lawyer. What challenges have you faced entering new regions and or countries? And do you think it's possible for African-based startups to build truly continent-wide solutions?
Yeah, that's a very good question. So one of the major challenges is the issue of licensing, and of course having to start over, what you've done in a couple of countries already.
Yeah.
When you go to this new country, they have a new set down rules and requirement laws that you have to comply with. Sometimes you have to engage, lawyers in that country, engage the stakeholders. It's sort of strenuous, but it's doable, but it's got a toll on your business. So if we have this harmonized license regime in Africa, whereby if you've done something in one country, you can layer on that and then just transfer it to a new region. That would save us all some time. For example, what is done in the fundraising stage, whereby let's say you're raising money, and then someone wants to come in and they ask you who has already invested in your company, and you mention one of the big names, and they're like, oh, we don't need to do our due diligence because we trust that company has already done theirs. So that's sort of something that could work in Africa. If we have one harmonized, compliance regime that could work for at least, let's say, region by region, and then globally. Yeah.
Great, thank you. So just a quick recap before I let you all go. We've talked today about all of these journeys to finding product market fit and the importance of really letting customers and the market, drive what you're building, let them tell you what they want. We've also touched on regulatory issues and challenges, but also how some of these challenges are opportunities. So we'd love to see the African, the AFCF, and God knows why this acronym is so complicated. Of course, it's the most complicated acronym we could have. We hope to see that pull through so that African countries, African businesses, small entrepreneurs, small businesses can actually do work and trade with each other. And we've also touched on fundraising and the importance of, again, focusing on building a real business, and the money will come. You see the founders who have raised a lot of money say this all the time, so I hope to believe them. And lastly, the importance of your team. I think talent is very, very important for startups, and really finding those early believers in the mission that you're building, and trying to keep them with you as you grow. So if we could just give our panelists one more hand. Thank you for joining us.